Hey everybody, it's Pete. Good morning. Welcome to Stock Trading Pro. Boy, do we have a lot to talk about today. The volatility in the market just super amplified, and the difference between the stock market last Thursday and Friday compared to the Thursday and Friday that just passed. Oh my word, what an amazing contrasting price action where we ended 2 Fridays ago, closing on the high with massive volume, fully expecting to get bullish follow through. Last week, the market imploded, especially financial stocks, which we're going to break down. Obviously, we're going to talk about Silicon Valley Bank. Yesterday, the government said there's not going to be any intervention, no bailout overnight. Another bank came in and took a part of them, or is about to take a part of them. At least that's what they're talking about. And now the volatility is all over the place. We had our swing trade meeting on Saturday, which is where we spend our time game planning for the following week. And obviously, Silicon Valley Bank and the banking sector in general was a big part of that discussion. So we're actually going to break that down today. We're going to talk about, should you even bother trading it? And that really depends on your activity, your experience level, actually. How long have you been trading stocks? How fast can you make decisions? For those of you that are brand new, we're going to talk about fear of missing out and whether or not you should get involved at all. And we're also going to talk about what it's like to be an active trader in this kind of market. We're also going to break down the sector rotation, industry groups, and a couple of stock picks to hang into this week, which is now March 13th, 2023. Happy birthday to my brother Thomas today. Hope you have an awesome day. So, boy, do we have a lot to cover today. So stick around. We are going to be back in just 1 second. Okay, so thank you so much today, everybody. Really appreciate you being here. Hey, LJ, good morning. How's it going? Good morning. Good morning, T Brown. How's it going? So we want to get into first obviously the big story of the day, which is the Silicon Valley Bank story. Let's zoom this in a little bit because pretty much everybody's going to be talking about this. I don't know where that you can possibly not. If we could break down just the stories from the last 24 hours, you could actually see here as of yesterday. This was Friday afternoon, Sunday afternoon. Treasury Secretary Janet Yellen said the government will not bail out Silicon Valley. And then just within 12 to 14 hours, things changed dramatically. Now, what's interesting about this is who actually is in trouble here. Now, it's something that a lot of people don't know or haven't experienced. I just want to bring this up again, just to kind of really bring this into focus. Oh, and by the way, this edition of the Daily Ticker, you can actually download your copy of this today. I'm going to actually show you how to do that. You can grab the link below the video. I promise I'll leave it in there for as long as you want. So I'm actually going to go up. I'm going to show you how to find it and how to make a copy of it. So it's below the video in the description. So what I want you to do is you want to go over here to File, and then you want to go to either Make a Copy, or you want to go to download, depending on how you want to download it, either as a Word document or as a PDF. It's kind of fun to have it to go back and look over. So the big thing I want to talk about, and really the big thing that I want to get across here, is who actually was at risk here, because there was a lot of talk about the bank itself getting bailed out, Silicon Valley Bank, but it was really the depositors that were in trouble. So if you don't understand what actually happened in this entire situation, the bank itself actually took deposit money and they invested the deposit money into government bonds, and not anticipating the Fed raising rates as fast as they did. So the fact that the Fed raised rates as fast as they did turned those billions of dollars in allocated money into a losing bet, and that's actually where the liquidity problem happened. So what is actually at risk here are the deposits. Now, if you don't know the FDIC insurance, essentially FDIC insurance covers up to $250,000. The problem that we're having here is, and I think this is really the big banking thing that's going on right now, is that the same requirements, so the same FDIC insurance, is for individuals as well as businesses. And obviously the potential for businesses to have millions and millions of dollars in the bank. Not that a person can't do that. Everybody needs to aspire to have that kind of stuff, right? But the same number, the same FDIC insurance for businesses is just not enough at this point. And I think that's really where the regulators are coming in and really starting to wake up a little bit. And unfortunately, it takes something like this to happen. So it's not so much that the bank was in trouble, which is why Janet Yellen said what she did yesterday. It's the depositor the depositor money that was actually at risk, anything over that $250,000 number. So just want to really kind of give everybody the rundown on that. So I have a bunch of articles in here in the newsletter. You can actually go article by article. This Twitter profile actually here as well. You can actually click on here or click over here to download it. This is a really, really good post. You can see it's actually been viewed over 4 million times. And it really gives a great breakdown of who's at risk, how it happened, what's going on. And he's got a little bit of experience, 10 years in the banking industry, and it kind of breaks down why you should pay attention. So it's very, very interesting on that breakdown. So I guess what we want to talk about here today, and this is all, I mapped this out inside of the daily ticker today, where I want to ask you to kind of look in the mirror and ask yourself, what kind of experience do you have to be trading this kind of volatility? And I want to break it down because if you don't know, I had a trading firm in New York City. We had over 300 people. I have a lot of experience in this, dealing with new people and what a lot of people will call the fear of missing out and chasing that volatility. We really need to come back to why we choose to accept risk in the first place. Why are you putting your hard-earned money in the market and in harm's way at all? And a lot of people don't know the difference between accepting risk and taking risk. Now, if you're taking a risk today and taking on that volatility without having a high expectation for follow-through in your direction, then you're just taking risk. Accepting risk means, okay, I'm accepting the fact that I might lose money in exchange for the fact that I believe that my edge has a really solid chance of following through. So remember, taking risk versus accepting risk. Accepting risk is like you're perfectly okay with that, and you have expectations and reasons, arguments that you put into that trade to say, I expect that to move in the direction of my profit target versus my stop loss. So that's a mouthful, right? But I want to break it down for you here. There's a lot more stuff in here that you can actually gather. Bitcoin actually has rallied quite a bit off of this as well. But here's where I want to start. A poor trade or a failure by banking regulators. Now, here's what I actually want to work into this for you, right? So an unfortunate situation for many businesses and the people behind them, right? The people behind the businesses. I'm not talking about the bank. I'm talking about the actual people. Should be a fantastic opportunity to trade. Tape reading becomes front and center this morning. So I just want to highlight that for a second as well. So we're talking about tape reading here and the opportunities within the volatility that's happening right now, both in the banking sector as well as in the entire market right now. If you didn't happen to see what the futures look like, let's actually just take a look at that, because it's actually a pretty amazing chart going on over the last 24 hours. And if we could just break this down for everybody. So this is what we look like over the last 24 hours. It's pretty chaotic. Really, the bottom line that I want to get across here right now is, should you at all be accepting risk or making trades in this price action right now? And it comes down to a couple of things, which I want to cover right now. And trust me when I tell you this, this is sent from a position of experience, but also from a position of I've been in your shoes, and it's very easy to say, I want to get involved in this, but you really have to ask yourself some key questions. And that's, can you make fast decisions with this kind of price action that's unfolding right now? If the answer comes back yes, let's go get it. We actually talked about that today. The headline of the daily ticker today is, if you got it, flaunt it. And that basically is in reference to, if you have the skills, both from a tape reading and from an order flow perspective, go get it today. There's going to be a lot of volatility. If you are struggling in good market conditions, today's probably a day to step back and do what we call PPC, which is preserve precious capital. So I just want to break that down for you right now and talk about what that actually looks like. Okay. So you can expect the price action to be volatile and appear to be chaotic. Now, appear is the big word here, because appear is going to be completely based on how well you can read the market. So one thing that we talk about a lot in our community is something called making distinctions. Right now, if you happen to be a brand new trader or somebody who's brand new to the stock market, you're focusing on bull flags or bear flags or moving averages or stochastics or MACD or those kind of things right now, right? And that's surface level trading experience. The traders that level up and finally get beyond that and wake up every day expecting for the stock market to make the money is because they could make more distinctions. So what I want to tell you right now is, you probably a month from now, 2 months from now, be looking at those same exact charts, Nothing will change other than how much you can now interpret in the moment. So again, most people do not need to know more once you understand the basics of order flow and tape reading and even technical analysis for that matter. It's learning how to use it better to make better decisions. That's what changes. So again, if you can think about driving a car, you probably are well beyond when you first started driving a car, but you probably don't know that much different. You got the brake, the steering wheel, and the gas pedal, right? There's all the basics. And now you're driving, you don't even think about it. You just get to where you're going. And a lot of that stuff is just, it's not so much intuitive as much as it became second nature. That's what trading becomes when you get past that point and you're trading at higher levels. It's the same car. You just know how to use it better. So I just want to really hopefully inspire you not to get lost in too much training and too much education. Finally, pick a way that you like to look at the market and really, really learn how to trade stocks and read the stock market with one particular way of doing it. Obviously, the way we do it is order flow and tape reading. So I just want to keep getting through this because it's important heading into this week what kind of risk you're going to put in front of you and whether or not it's right for you right now to tackle it. Okay. So as we break this down, all right, you'll need to make fast decisions. It's in these moments that you need to be honest with yourself. I'm going to put that in capital letters here just for everybody. Should you get involved? All right. The fear of missing out is real and will be strong. You're going to be reading all these headlines and everybody wanting to get involved. You got to really ask yourself, should you get involved based on your current skill level? Remember why you're placing trades in the first place. To accept risk in situations where the odds of hitting your profit target are significantly greater than your stop loss. So you have to remember this today and really think about it. I'm actually going to underline this. I'll keep trying to bring these things out here now. Remember, the reason we choose to accept risk when we buy stocks is because we believe at that moment there is a greater chance, a likely chance of it moving in our favor and hitting our initial profit target, whatever that happens to be, versus our stop loss. So you have to ask yourself, as you're heading into this day and specifically heading into this week, as the Silicon Valley Bank story is unfolding and kind of working its way into other banks and quite frankly into the entire market, is this the right time for you to choose to accept risk? Or should you be using this as a learning experience and say, you know what, this might be a little bit beyond where I am right now. Maybe I should preserve my capital until the situation becomes a little more obvious. And there's nothing wrong with that. It's actually smart if that's where you are at this particular time in your trading, okay? So in this case, many will be chasing volatility, not certainty. You want to highlight that part. That's very, very important. The back and forth will knock you around and make you feel like you know nothing about trading, and worse, doubt your skills. I'm not being a Debbie Downer here. I'm offering some experience. So please take my experience. PPC, when it's the right play for you, which in our community means preserve precious capital. And I'll bold that for you. Okay. If you're in the other corner and you have experience, get ready to double your activity. That means more trades, more decisions, and especially faster decisions. Professional active traders live for these situations. It'll be helpful to have hotkeys set up for days like today. So again, I'm going to finish this up and we'll get into that. Tape reading and the speed with which you can interpret the buying and selling pressure gives you a big advantage during extreme volatility. If you got it, flaunt it. This will be the time to do it, and especially today. If you don't have that ability right now, be smart, think long term. Don't let social media peer pressure put you into an uncomfortable position. You might not be trading for a living, but this is your chance to act like a pro. And I'm going to break that down in just 1 second. Only accept risk if the odds are stacked in your favor and if you can make fast, correct decisions. For you, it should be an amazing day of price action to trade. So we're actually going to talk about this right now. This is your chance to act like a pro. I'm going to highlight that. I don't care right now if you are trading full-time and you're in front of a screen all day, if you're a full-time trader and maybe you're just longer-term stuff, or if you have a full-time job or you have a business and you're not trading full-time, you're just looking maybe to get to that point where you can replace your job at some point in the future. So I'm really talking to that person right now. This is your chance to think and act like a pro and really make a good decision about whether or not this volatility in the market is the right time for you to put your hard-earned money in harm's way, because you believe there's a good chance you could make money, because you believe right now you have the skills to handle that back and forth. You could make fast decisions, not get tied to a losing position, get out, go back to the next trade, put a trade on, see it move in your favor, trail that thing up, put a trade on, see it move up, pull back, get out, go to the next trade, all without emotionally being tied to one of those positions. This is old school active tape reading, where if you're going to get involved today, you can't get married to an opinion. It's going to change. It's going to change fast. It's going to change every 15 minutes. It's going to change every hour, and it's going to change every day this week based on how this news story is unfolding. Let's not forget that the market was a little bit heavy even before this happened. So you need to have what we call a line in the sand. A line in the sand is some level of tape reading that tells you that price action is moving closer to or further away from that level. Now, everybody's tape reading is not like the stuff you see on CNBC that's going across the bottom. Tape reading is you pick a level, you pick a price, and you say, I'm going to read price action away from that up or down, and that's going to give me clues about how strong or how weak that stock is. Now, you might be like, well, I don't know how to do tape reading. No, you absolutely know how to do tape reading. You just don't know how to do it before you get into the trade. Before you get into the trade, you need to pick a price. Now, it could be yesterday's close. It could be yesterday's high. It could be today's opening price. It could be Monday's opening price, and you hold it for the entire week. Whichever one of those you pick, maybe a 20-period moving average, maybe a 10-period moving average. Maybe its prices are above the MACD. And as long as that's still valid, you are hanging on to that trade. So you are actually reading the tape. You're like, that still counts confusing, right? Wrong. Think about this. As soon as you buy stock, so let's say that either Gardner or John Bates picks up stock, they buy it. Who knows that stock better than them? Because they own it? Nobody. As soon as you have a position on, you know that tape better than anybody, because you know your entry price, that's the level, that's the line in the sand, and it's moving up or down away from that, and you know better than anybody if that stock is strong and continuing to be strong. Maybe you're up by 50 cents or $1, and then you're up by 70 cents, and now you're up by $2. So you can intuitively know the internal strength of that stock just based on the fact that you're in the position and it's moving further away from your significant reference point. That's a part of tape reading. For tape reading before you're in the position, or when you're trying to get a handle on the chaos that we could possibly see today, you need to pick a price level that matters. For a lot of people, it's the opening price. For other people, it's yesterday's close. Pick a level and read the tape. If you do that, the whole market and all that chaos slows down because you're only focused on that one thing. Remember, when you know what you're looking for, you're no longer lost. The key, though, is to know what you're looking for before you need to go look for it. Because when you say, that's the only thing I'm looking for, the whole market slows down. And the only thing you're concerned with is that one price. We call it the magic price because that one price is all that matters. That's the foundation of tape reading. So when you talk about order flow, that's the bigger picture dominant force in the market, the bullish or the bearish side of the market. When we're talking about tape reading tells us, is that dominant force still valid? Now, a way to really kind of bring this home for you is to think about, if you place a trade, or you go into the day or you go into the week and you say, man, I really want to buy this stock, and you build all the reasons into that stock. And I'm going to show you an example right now. You say to yourself, boy, I really want to buy this stock, and the market opens and it's going down and it's going down and it's going down, and you buy it anyway. You're not reading the tape. You don't have a line in the sand. I'm going to give you an example of a stock that meets that criteria right now, which happens to be one that I'm looking at actually heading into today. And it's this one. So CRM had this monster move, right? Had a really good flow here coming off of when they announced layoffs, and then they had some more news. Now they got activist investors jumping in there as a possibility, and they had earnings. And now the stock is pulling back, and you're like, oh man, I can't wait to buy this thing. And it goes down. I can't wait to buy, and it's still going down, and it's still going down, and it's still going down. And we had big capitulation on Friday. Not only we have capitulation, but we had a big spike in volume on Friday as well, which is something that we're going to, which is a big part of reading the tape. So if you could imagine that you are looking at trading CRM, or any other stock that you wanted to buy, you need to make sure that you put those two pieces together. Now, I don't care if you're holding a trade for 10 minutes or 10 weeks. This still works. But what you need to know is how long you plan to hold the trade, because there's nothing worse than putting on a trade, making a, let's call it a bad decision, where you failed to get out where you said you would get out if the trade wasn't working. So in other words, you bought it here, and prior to the trade, it goes down here, and you say, okay, I'm hitting the road. That thing is down to that spot for whatever reason, right? And it gets down there, and you hesitate, and you hang on to it, and you're like, I'm just going to give it a little more chance to come back. That's not good trading. So if you go back to what we said before about today's your chance to prove to yourself you're going to act like a pro, you must get out where you said you were going to get out. So you have your tape reading level, you'll eventually have your entry price, and you'll have your stop loss. As price action trades around those things, it's not important to predict what's going to happen next. If you did your job properly, we're going to break down the market in just 1 second. If you did your job properly, you set your expectations before you bought that stock. So remember that the hard work of the trade, the hard work of defining whether or not it's going to move in your favor, whether it's likely to move in your favor, happens before the trade. What happens after we put the trade on is the trade management part of it, where we now already have those three critical pieces. We have our entry, we have our stop loss, and then we have our initial profit target. As price action drifts around there, you should have a plan in place to know exactly what you plan to do. And I'm actually going to show you what that looks like right now. So let's continue with the market, and let's break it down a little bit more. So getting into the sector rotation from the last 4 weeks, you can see we went from kind of neutral after we had that rocket move higher in the beginning of the first 4 weeks of the month, went a little bearish, went a little bullish, and last week was just an absolute mess. So what does that mean coming into the day? Well, we got to break this down. What does this mean for setting up the day, and what is our expectation? Well, if you remember, the trend is your friend until the end when it bends, right? So the bias in the market right now is bearish. So if you're choosing to take advantage of this pre-market pop that we're getting right now, you're trading against the big picture. So now the big picture is relative. Again, you could be day trading. You could be trading on a much bigger picture where you're looking at stocks using the 50-period moving average. And we've talked about that recently as well. So let's just set the expectation for going into this week, for going into the day. Bigger picture right now, the market's bearish. You can actually see it here. And if we break this down a little bit more and actually go into the market and how the market's been unfolding, and we kind of draw this thing out, you can see the dominant side is on the selling side. Not only did we have 10 days of selling, and then we had last week of selling, we had what we call a bearish U-turn into well offered, into indecision, into well offered, into well, all of this leading to, we now have a solid week of selling. We had 2 weeks of buying, indecision, bearish gap, selling. Here's the thing. Before you judge your personal results, ask yourself, are you trading this, where the buyers are stepping up and keeping it there from 1 week to the next, or are you trading this? Indecision, bearish gap, selling, a week of buying and then selling. And quite honestly, this week of buying was just that Thursday and Friday that we talked about before. I'm going to get to the main point here in a second. So that week turned up on that just based on that one day. So the market, as of right now, is bearish coming into the week. So that's the expectation. That's where we are right now heading into the week. So now you have to make a decision. If the bias is bearish, do you short sell opportunities, or do you just step back and look for stocks with relative strength? It's easier to find stocks to buy and look for stocks with relative strength. So I'm going to break that down for you right now. And we're going to kind of work our way across the market and go look for pockets of opportunity that had relative strength or are showing relative strength. So in other words, when I say relative strength, the market's going down and those stocks are like, no, I'm staying here because we have buyers underneath them. Those are the leaders that you want to pay attention to. And I'm going to give you a couple examples now. If you're an experienced trader and you understand trading both sides of the market, the bullish side and the bearish side, and you're comfortable with short selling, active day traders can typically either trade futures, or if you really want to level up your game, you could trade inverse ETFs. And I'll show you what that looks like, We use them mostly to day trade when the market goes down. So if you're not familiar with what inverse ETFs do, inverse ETFs essentially go up when the market goes down. So in this case, we usually trade the SDS or the SQQQ. I'm going to show you what that looks like. So if we could take a look at what the market did, and we'll bring this out on the 5-minute chart, you can see on Thursday and on Friday, right? So if we take a look at the inverse ETFs, which is the SDS and the SQQQ, if you happen to be day trading and you don't like short selling, don't understand it, or just don't want to do it, if the market goes down and the market internals are bearish and you're getting feedback, validation, secondary indicators that confirm what you're seeing in the price action, then you could buy inverse ETFs. The market and the internals are pointing bearish, but inverse ETFs go up. So a lot of people, it's just easier to wrap your head around to trade those inverse. So we're talking about SQQQ and SDS. Okay, correct those down. Now, as far as breaking the market down, you can see actually how we were heading into the week. Now, this is what's interesting. We have a proprietary list of stocks that I put out for the community every night where I do the research, and this list is usually stacked. You can actually see it's bullish stacked order flow. Nothing on the list today, but the bearish stacked is loaded. So you can actually see, again, heading into the day where the bias is coming into the week, and you can actually see what's going on here. So if we kind of bring that back into what does that mean for trades this week? Now, I want to be clear about this because this is a part of trading and stocks in general and the stock market that a lot of people mess up. If you remember back at the beginning of today's video, I said last week, not the week that just finished, the week prior to that, Thursday and Friday rallied on strong volume. Both days closed near the high. So I just want to give you a visual of that. Okay. So we're actually talking about these days over here. If we could just pull that back, these 2 days. This is Thursday and Friday following 3 days of indecision and not much going on, right? So I'm just going to tell you straight up, we went into those days expecting a higher opening and follow through. And quite frankly, we actually got it. The next day actually opened. So if you bring that back into today, we are actually expecting the market to open and push lower first. Now, that's not predicting. I want to be super clear about that. What you need to do is have the guts, is say, based on the order flow, based on the recent price action, based on how the stock closed yesterday, based on how the market closed yesterday, based on where it is from where I read the tape. For some, it could be the moving averages, based on where it is to the 20-period moving average, based on where it is to last week's low, based on where it is to the start of March, whatever it happens to be. As of right now, it's bearish. So we have to go in with that bias that's already happening, and we have to expect it to continue until we see the tape change. And that's really what trading is all about. So if you can think about what we're talking about right now, we're simply looking at what's going on and what are the odds of it following through. If it follows through, fantastic. I'll show you the plan for that right now. If it doesn't follow through and we trade in the other direction, we have a plan for that as well. So what you can see here, hopefully, is that the highest levels of trading, and I'm not saying this is advanced, I'm just saying it's a little bit more preparation. The highest levels of trading are paying attention to what is happening and then creating a plan for it to probably follow through. That's where trading is separated from those who are confused by the market, because you're probably looking to try and predict what's going to happen next. Where's it going to be a week from now? Well, if it's going in a particular direction, I'm going to assume it's going to keep going in that direction until what? Until I see the tape change. So now I'm going to break down what I'm looking at heading into the week. I'm going to break down sector rotation. We also have options for you as well, a big breakdown on the options market. Somebody, Curlin, just asked about the VIX. We actually have that in today's newsletter as well, what the VIX is doing. And then all the way getting down to sector rotation, industry group rotation, and then all the way down to stock picks that I'm looking at for this week. Remember, these are all for educational purposes. It's up to you to make that final decision. It's up to me to help you make better decisions. By the way, if we did a good job on these videos, do me a favor, hit subscribe and make sure you hit that, that thumbs up button. It lets me know that this is the kind of stuff that you like. So if we get back into the newsletter and start to break down the week in the manner that we just discussed, you can see over here on the left-hand side, we start out with the market, which is assessing the big picture and where we are, bullish or bearish, and what we expect for follow through and how we plan to trade it. Then we break down sector rotation and we start to look at stocks like we talked about, which ones are showing relative strength to the market. So we broke down these 3 stocks that are showing relative strength to the market coming into the week. Okay. Then we break down technology. Technology has been stocks that have been holding the bid, and then we list the list of stocks that are holding the bid coming into the week. We also break down the strongest sector that the market has had for the last 7 months, which is industrials. So we're working our way through bullish order flow, giving ourselves idea heading into the week. And then, of course, there's GE. My word, if you have not been watching GE the last 7 months, I'm not sure what you've been watching. It's just been the steadiest rock that you could possibly imagine. Hopefully, you've been keeping an eye on that one. So you can see how we're breaking the market down, and then we actually get to the other side of the market, and we start to dive a little bit deeper into the financials in that direction of the way things are going, and especially banks. Then John breaks down the options market here, and he also talks about how it's affecting the banking industry. However, what he actually then breaks down is the banking ETF, which, by the way, if you want to take a look at that, which is what we highlighted today, which was KBE. This is where you should keep an eye on. And then we break it down even further where John speaks about the VIX. So we start to break down the VIX a little bit more and what we'll be looking for in the VIX. And you can see how the VIX spiked last week. Breaking this down even further, we then get down into industry groups and then specific stocks that actually were strong prior to this and which stocks are trading into a bullish pause. So we're starting out with the market. We're getting a bias. We're breaking it down to the sector. We're breaking it down to which stocks had relative strength. And then we're breaking it down to which individual groups. So if we take a look at some of these casino stocks and how they traded recently, we're actually getting a pretty clean, what a lot of people would know as a bull flag. So that's why we're keeping an eye on those. And then we break it all the way down and we start to head back down into the market leader. This is a big part of trading here as well. The market leader that kind of lifted the entire markets when January started is NVIDIA. And you can actually see this longer term trend is actually perfectly being tested coming into today on Monday, but it's kind of still stuck in a box. So really, there's no opinion on NVIDIA right now other than it's bullish until it either breaks that level or that level, and then go all the way down and we start to break down some stock picks for the week. We have one on the bullish side, one on the bearish side. And again, you'll see me break that down based on what the stock normally does, based on the volatility of what the stock normally does, what kind of price action I'm looking for before I put the trade on, and then how I'm coming up with when and if I would add to the trade. And most importantly, what's the initial stop loss and what would be my initial target for choosing to accept that risk. So it's all broken down there for you. So hopefully this inspires you to really think about what kind of volatility you should take. Hopefully we're inspiring you when you're in the stock market, thinking about what kinds of trades and how you read the tape based on if you're day trading, swing trading, earnings trading, position trading. It all is the same thing. As a matter of fact, earnings trades are actually probably the easiest way to read the tape because it's not hard to determine that level, that line in the sand after the earnings comes out. So if you want to get a copy of this, again, I'm going to show you how to grab that and save it for yourself. If you go to, let me actually just move this out of the way. If you go over here in the top right-hand corner, you go to File, and you can click Make a Copy. Or if you want, you can actually download a copy in whatever format you wanted to. So it's kind of fun to go over this, and you can actually download this in the description below the video. It's kind of fun to go through this and then challenge yourself and say, wow, am I thinking at this depth? Can I make this many distinctions? Or am I just saying, let me run a scanner and see what I should trade today? That's not enough. You want to level up a little bit, spend that little bit of extra 10 minutes and really, really challenge yourself to say, if I'm going to put my money in harm's way, I really want to have a good feeling and a good process to determine if and when I should accept risk and what does that look like. All right. A lot going on today, everybody. Have an awesome day. Trade well this week. There's going to be a lot of volatility. Thank you so much for joining me. If you have any follow-up questions to what we talked about today, make sure you leave that comment below the video. I promise to get back to you as soon as possible. All right. Thank you so much. I'll speak to you soon.